If you weren't taught how to manage your finances, whether personal or business, while you were growing up, then it will probably feel overwhelming, confusing, and scary. You're not alone in that. But here's the thing, if you want your small business to grow and prosper, you have to build a basic understanding of your finances. There is no way around it, trust me. And you don't need to become an accountant, but you have to develop healthy money habits that will support your goals. So today in this video, I'm going to share 5 essential money habits that will help your small business not just survive, but thrive. Before we get into it, hi, I'm Susie. I'm a finance director, a business owner, and an investor. And on this channel, I talk about how it looks and feels like to own and grow a small business while having a darn good time. If this is the kind of content that you enjoy, please do hit subscribe. I would love to have you on board. So the very first thing that you should do as soon as you decide to have a small business is to open a separate bank account for your business transactions. So you should have a bank account for your personal transactions and a separate bank account for your business related transactions. If you're running your small business through a separate limited company, this is a legal requirement. So an incorporated limited company needs to have its own business bank account under its name. But even if you are a sole trader, you should still have these 2 separate bank accounts. And here's why. It keeps your business finances nice and clean and tidy. And then at the moment of purchasing anything, you're already making the decision on whether that purchase is a business related purchase or a personal purchase. And so you should be already deciding which bank account that transaction should coming out of. And this makes preparing for your tax return so much easier and way less stressful. And so it's much easier to get a clear picture of how your business is performing. And you don't have to sift through thousands of transactions trying to identify which one is a personal one and which one is an allowable business expense. Mixing business and personal bank transactions creates more work, extra risks, and extra headaches. So keep separate bank accounts for cleaner records, easier bookkeeping, and in general, a better professionally running business. The second healthy money habit that I want to share with you is to do the bookkeeping regularly. Bookkeeping is just the process of recording your business transactions, so your income and your expenses. And the key here is not to leave it for the last minute. If you're scrambling to find receipts and categorizing all the transactions just a few days short of the tax deadline, you're creating so much more unnecessary stress for you, and you're much more likely to make a mistake. Not to mention that if you use an accountant, they will probably charge you more for a last-minute rushed job. Whether you use an accounting software or just a simple spreadsheet, what you should do here is to set aside some time regularly, maybe every week or even once a month, so that you can categorize all of your transactions, make note of your total income and your total expenses, and the difference between the two will be your profit, and check in on your cash flow. So what are the transactions that are going to happen in the future, and will you have enough cash in the bank to be able to afford them? This habit keeps you in control and gives you real-time information and insight into your business. Doing a little bit often is better than doing one massive job at once and very late in the game. The third healthy money habit that I want to share is to get an understanding of what your gross profit is. Now we're going to get a little bit technical, but stay with me. So your gross profit is how much money you actually make from your offer, so your services or your products, after you cover the direct costs of delivering your service or making your product. So for example, let's say that you decide to host an event. The ticket income that you get from selling tickets for the event is obviously your income, while all the expenses that you incur in order to produce that event is going to be your direct costs. So an example is the foods and drinks, the hire of the space, any staff that you will hire to coordinate the events, and any speaking fees that you might pay anybody who is on the panel. The difference between the ticket income and the direct costs of producing the event is the event's gross profit. And that's how much that specific event will contribute towards paying for. If you don't know the gross profit of the services that you're selling or the products that you're selling, you might be working on stuff that feels busy, but that isn't actually contributing towards the overall profitability of your small business. Every offer that you have should be contributing positively towards the year-end profit. Otherwise, you're just working really, really hard on something that isn't contributing to the company's wealth. Knowing more about your offer's gross profit and gross margin will allow you to make better pricing decisions products, smarter marketing choices, and will encourage you to keep your costs nice and tight and efficient. The fourth money habit that I want to share with you is to save for taxes immediately. As soon as you get paid for a job, immediately set aside a portion of that income and put it in a separate bank account, and that will be your tax savings pot. A good rule of thumb here in the UK is to set aside about 20% of your income to save for your income tax bill, especially if your profits are under £50,000. And you should save a little bit more, maybe 25%, if your profits are above £50,000. But make sure what you check what's most appropriate in your country. That way, when tax season comes, you already know that you have enough cash in the bank account to be able to pay your tax bill. And this habit of setting that money aside means that you're not going to be tempted to spend that money on business operations and that you signposted for your tax bill. Treat tax savings as a non-negotiable expense. And then the last tip that I have for you for good financial management is to make a financial plan. Now, when I say those words, most of my clients think that it should be something extremely complicated with lots of moving parts, and it doesn't have to be. It can be something that is quite simple. All you need here is to know more or less how much profit do you want to make from your business. And then from there, you can identify what the expenses are in the company. And then you need to set an income target so that you can make sure that your profit target is achieved. The key here isn't to predict the future. You don't have to be a fortune teller and try to predict what's going to happen, but it's about setting an intention. Set your financial targets for the year. What is it that you're aiming for in terms of the income that you want to generate so that you can achieve the profit that you want? And then from there, you break it down into a strategy so that you can hit your targets. So for example, how many clients do you need to onboard every month so that you can achieve that level of income? Or how many online courses do you need to sell on average every week so that you can achieve your target income? And from there, you can derive your content and marketing strategies so that you can make sure that you reach as many people as possible and find your future potential customers. Having a financial plan helps you set strategic, intentional decisions instead of just reacting to problems. It helps you grow on purpose rather than by accident. When you know what's coming in and what's going out and what needs to happen next, you run your business with confidence. It doesn't necessarily mean that you have to have everything figured out. No one has. But it means that you can at least identify what the next step is. That's really all you need. And there you have it. These smart money habits will eliminate the anxiety of not knowing where you stand financially. And they will help you always have enough money to have a thriving business. So let me know in the comments which ones of these habits are you already doing and which ones do you need to start working on. If you found this video helpful, I would really appreciate it if you gave it a like and subscribe to the channel. Thank you so much for spending this time with me today, and I'll see you at the next one. Bye!